Time now for us to move back to Southern Africa and take a look at the Zimbabwean market. Now we've got that mining index in Zimbabwe under pressure for the past week. It shows no change there, but for the past week, certainly know that it's been under pressure, losing 10.5%. There's the industrial index, which is the main index and is composed of some of the heavyweights, also under pressure during the week, down 2.3%. Let's now see if we can get Tino Kambasha, Executive Director at Imara Edwards Securities, to talk to us about what's putting pressure on the shares. Let's begin, Tino, if you like, with the industrial index. And I see some of the big names really have been in trouble here. So you've got Delta, you've got Econet, both showing really huge pressure during the week. Any specific reason why? Or are we talking about that March 16 constitutional vote?
Thanks, Godfrey. Well, on the industrial index, we've seen Delta come off, and Insco actually, Econet was the one supporting that price, was up quite a lot this week. But generally, we've seen a bit of profit taking. I'm not too convinced that the downturn in the stock market is due to the constitution making process, which is on next week, but it's more of profit taking and realignment. And also on that mining index that you had mentioned, down 10.5%. That's, I think, mainly due to commodities and metals taking a bit of a beating globally. We've seen the Soros funds selling off in the United States. So, that's had a knock-on effect on most mining indices across the world.
Yeah. When you look at a stock like Delta, for instance, I mean, for the week, we're talking about 12% down. Where does that leave us in terms of valuation? Are we looking really here at an oversold position?
Yeah, I think it's oversold. Delta had run quite a bit in January, and we did expect it to take a bit of a breather. But we're seeing a buying opportunity at the moment, and that's beginning to show. We think that will come through in the next week or so. So it's just a bit of profit taking. I know 12% seems to have quite huge out there, but in Zim we see these fluctuations quite a lot.
I know, because I mean, if you look at it, 12% in United States dollars, that's quite a lot of money lost. But one thing that caught my eye is the whole issue around the value of shares traded. I mean, if you look at turnover, you're looking at $11.4 million versus 10 million last week. So actually, liquidity is improving a little bit here. At the same time, though, you're seeing the market under pressure. Where is that money going?
Well, it's all focused on the top companies, mostly Econet, Delta, Insco. Deribor had seen about 1.7 million in the last week, and of course BAT and CBZ, which had their results this week.
Yeah. Is that sector rotation, though? Are we seeing some of that money moving out of perhaps your consumer directed stocks to perhaps some of the more or less perhaps consumer facing shares?
It's mostly based on consumer fast moving goods.
Yeah.
Really not really touching most of the other areas. We're seeing a bit in the banking sector and obviously BAT.
Yeah.
But it's mostly those consumer goods.
Let's talk about those BAT numbers, because I mean 32% up the week is a huge gain, even if you do consider the fact that the results were solid as you described them, 151% in year-on-year growth in attributable earnings. I mean, that's quite an advance, isn't it?
Yeah, these guys are doing a great job, and we always say, management is the key thing.
Yeah.
But if you actually look at this, they had, excise duties increased this year, so their volumes were down 11%.
Yeah.
But what they did is they changed their mix of products, and we saw Dunhill come into the market. It grew by 48%, and the strongest brand here is Madison. It's contributing 68% to sales volumes. So they basically just improved their efficiencies and improved their pricing structure.
Yeah.
We're seeing cigarette pricing every single day, and they're giving the market, a guide what they should be paying. And this has clearly helped the counter come up quite a lot. And gross profit margins up 57.7% from 46 there. Operating margins up 34% from 18.5%.
Yeah.
So, just great stuff coming from BAT, and another great Zimbabwe story.
Yeah, but what's going on here? Because I mean, 32% advance on the week is a huge climb, as I said earlier, suggesting that perhaps the market may have mispriced the stock here.
No, definitely, it was mispriced, and another issue was indigenization. BAT has come to the table. They have put through their indigenization plan. It has been approved. So, all that was being priced in. And I think generally what we're seeing is the country risk on Zimbabwe isn't as harsh as we thought it was, and foreigners are kind of looking at it very differently at the moment.
Yeah, another theme that I'm picking up as well is changing sentiment and also changing a mix in terms of the investments available in Zimbabwe. When the recovery started, I remember the story was around the fact that what we were looking at were mostly, your mobile phone companies. Those were the guys that were making money, and of course Delta was right in there. But now, in terms of the investments that are available, you're seeing a greater spread with these earnings that are coming through. CBZ now are showing those numbers that are very strong. How sustainable though?
Well, those are very strong numbers, and CBZ is the biggest bank. We do expect them to give such numbers. 48% growth in attributable earnings to 44.9 million. EPS there at 7.43 cents. But what's driving all this growth in CBZ? They've increased their insurance underwriting, decreased their loan loss provisions there. So we think we'll keep seeing this. They'll keep growing because they are big already, and they are taking full advantage of that. And we expect growth going forward.
Are your analysts changing their rating on the stock?
It's still a buy. We do have a bit of a concern on the provisions that they're providing. We think they should be a bit higher, but it's still a buy. It's still a good bank.